Hey everyone, and welcome back to the Scholar AI Founders Pod. Please check us out on all the typical podcast locations and find us on our YouTube channel. Sorry for the brief hiatus, and we are happy to be back with you all. So, Joshi, I know you spent some time traveling. Recently, you were out in LA, I believe, for the All In Summit. Just curious what your thoughts were. Any downloads?
We're back, guys. Scholar AI Pod. We're on. I was in LA. I was at the All In Summit in Royce Hall and on UCLA campus. I was there last year. My takeaway from last year was it was the best content anywhere for a conference. I think this year was very much in line with that. And the content lineup included Sergey Brin, Peter Thiel, Elon, astronaut Woody Hoberg, Salesforce CEO Mark Benioff, Travis Kalanick from Uber. And this year's lineup was excellent. It was a really great lineup of speakers. What were some key takeaways? Obviously, AI is a big topic, and Sergey's back in Google, working every day on projects in AI. He seems energized and interested. Peter Thiel's view of AI is that it's largely a bubble. Peter Thiel, by the way, is such an incredible open box thinker that he was probably my favorite speaker of the lineup. His view is that the question about AI is really a question about whether to invest in NVIDIA or not. NVIDIA is the only company that has made money in AI, and collectively everything else, non-NVIDIA, has lost money. And so his framework of thinking about it is to first make a decision on whether you like the NVIDIA bet, and then everything else is basically a losing bet in his mind. He thinks there's going to be, we've been talking on this pod about the AI winter. He didn't use that language, but he thought it was a bubble, and that there would be a significant contraction. Chamath said something similar, which is that they have not invested in the AI space, outside of his 80-90 projects, they've not invested in a lot from social capital, and that they also seem to think that there would be a contraction here in AI businesses because most have spent far more money in creating their product than they have in generating revenue and value from their product. Elon was there and talked a good bit about X, Twitter, and the journey there. A lot of other topics came up, including SpaceX and their recent launches. There were a couple of really interesting talks. Dude, by the way, Mark Benioff is hilarious. This guy is really funny. I would just hang out with Mark Benioff and listen to him and laugh for I could do that for years. The guy's super funny, really insightful, and he's still got the energy. He's got this great 1-1-1 system in terms of giving back 1% of revenue, profits, and time. Something that businesses should consider. So I really enjoyed Benioff's talk, and the Travis Kalanick talked emotionally about his time at Uber and his exit there, and what he's doing next, which is a really interesting robotics-based business around food preparation. Cloud Kitchens is the name of his new venture, really fascinating talk. The summit ended with one of the founders from Coatue, which is an investment firm. I think they manage $50 billion in assets. And he talked about the landscape of investing in venture right now. In particular, he highlighted how venture LP contributions are way down because investors have many other really good places to put their money. Venture returns have not been great, and therefore venture has been in decline for the last few years. Secondly, he talked about how all of the exit options for private companies have dried up or closed, narrowed. IPOs are way down, and so there's a big backlog of large private companies that should be public that have not yet gone public. M&A has also been significantly contracted, partly as a result of the IPO window being closed. And buyouts, PE buyouts, leverage buyouts have also been significantly in decline since 2021, which was the high watermark year. Since then, 22, 23, and the estimate for 24 are way down for all three varieties of private company exits. So all of that amounts to a historically tight time, difficult time for private companies, for startups, hard to raise money, hard to grow, hard to exit. So right now is a sort of perfect storm of difficulty challenge for startups and private companies.
Great. Fantastic. Good to hear, man.
I think if we want to just continue down the, pessimistic route, I think that is further maybe compounded by the fact that a lot of the bulk of investment capital has been deployed into AI companies. So even if you parse that data further into non-AI and AI companies, it probably tells even a little bit more of a kind of a bleak, forecast, I would say. So it's good. It's good. I'm glad you had a good time.
As Jay-Z says, if you can make it here, you can make it anywhere.
That's right. That's right. I do think the counter side of that argument, though, is, as Warren Buffett says famously, right? Be greedy when people are risk adverse, and risk adverse when people are greedy, or some paraphrase of that. And really, I think that what that will tell you is that in the times in which investment is maybe overflowing into a system, that vintage, so the 2021 vintage, if you will, might be a worse performing for a lot of those investment portfolios compared to companies that are taking swings in 23 and 24, because less risk capital in the system means, valuations that are kind of more tethered to reality, or maybe even undervaluing companies. And then companies are having to raise at decreased valuations because they simply need the cash in order to bridge into more favorable funding climates. And so I do think glass half full, this is one of the best times to be building a startup, with the specific caveat, which is always true of startups, is just don't die, and just stay alive until you can reach better waters, so to speak, for funding.
I think that's a really great insight, Damon. The 24 vintage and 25 vintage of these VC funds are going to be incredible because they're going to have such great entry price points. They'll be getting in at such low cost compared to where they got into ventures in 21, for example. And they're going to realize the whole market lift when eventually all this resolves, and it always does. The market always goes in these cycles. Those vintages, 24 and 25, I would expect are going to be incredible vintages.
Yeah, no, I fully agree. I think that trying to predict the time horizon is challenging, as we all know, right? We don't know exactly when that's going to happen, but you can read several stories around that kind of peak 2020, 2021 era in which they had booming secondaries that were allowing founders and early employees to kind of effectively exit, which also stagnated growth and all kinds of things. And so anytime there's asymmetry, either too little or too much, it's challenging, and it presents kind of almost the overcorrection, if you will, on the other side of that. And I think that's kind of what we're living through now. So
out of curiosity, was so like you mentioned Peter Thiel, like he's saying like the only positive bet is one on NVIDIA. Like, what was his perception of a company like OpenAI or Anthropic, like these research labs that are providing the LMs that everyone's using? Because right now there's like these layers of shovels, I guess, right? Like there are the compute providers, there's the research LLM providers, there's of course like the chipset and the data centers, whatever. But like, I wonder where his opinion kind of landed on, like, again, for someone like us, like we're a relatively small startup, we use LMs all the time. A lot of our money goes into LM costs, and that exacerbates the bigger you are, right? At what point is the shovel provider not interesting? Like, where's that line? Is it purely NVIDIA, and is that it? Or was it more nuanced than that?
I'm going to speak as best as I recall and trying to channel what Peter was saying. So his view was that this is a highly unresolved area. The LLM, like who is the winning LLM? Is there a winning LLM? How that resolves, at least my understanding of his viewpoint, is that this is still pretty nebulous time in that market. And to make any kind of feeling of certainty would be premature now, and that they all lose money. So how they eventually get out of that problem of not losing money is yet to be determined. They're either going to have to raise prices a lot. So this is now me speaking, not him. Mm-hmm. How they get out of that puzzle is either to raise prices a lot, to drive down their compute costs their hardware costs a lot, or find some other creative kind of level change, cost structure, pricing structure, so that they eventually make money. They're all selling secondaries, for example, like OpenAI employees who have equity are selling on the secondary market, the private kind of market where you can sell your shares if you've vested them. And so that implies certain valuations, but those valuations are based on companies that lose money. And so something we'll have to reconcile here. There's a lot in the air. And my sense from Peter's comments was that the only thing that feels like it's got any kind of footing, and again, like one of the things Peter Thiel has talked a lot about and continues to, is what's your path to a monopoly, basically a monopolistic style return. That's the real leverage in the market, is achieving some kind of monopolistic style return. That's where most of the profit gets generated. And the only thing that's sort of got the bones of that now is NVIDIA, but even that, for example, for inference is going to have a new category of competitors who are just battling for the inference part of it. So I think his view is, if you're going to bet on AI, really the question to first answer is, what is your view of NVIDIA? Does it have room to grow? How much? And any other question is not even secondary, but tertiary to that.
Interesting.
I think actually these two things are linked, at least somewhat, in that we saw a lot of companies that could grow sufficiently without becoming profitable. The most famous recent example probably is Uber, where they constantly kind of burned cash. They did so through raising very large sums of venture capital money, and then eventually IPO'd, and then eventually became capital. Given that there's just less risk capital in the system, a la earlier in this conversation, that pathway doesn't seem to be as available. And so I think that Peter Thiel has correctly identified NVIDIA is basically the only person who is returning an ROI that is positive in the short term on these AI investments. So even, let's say, as you were describing, even though us and other startups that are relying on large language model providers, yes, we're paying relatively large, especially for us, sums of money to those people. It's not large relative to the amount of money they're dumping into training and compute, right? And so I don't necessarily think it's about overall revenue generation, like it would be in maybe some other more favorable markets, but it really is, the scale is shifted towards profitability, of which all of these AI companies, at least the known ones, if you just look at AI in a vacuum, ignore Google search as an example, then they're losing money.
Yeah, I think it's just, I don't know if this is official or just speculative, but there were articles coming out recently about OpenAI, raising many billions of dollars backed by NVIDIA and Apple, right? So even the money's not coming from venture capital, it's coming from somewhere to kind of extend the distance that they have to run. And I wonder, well, obviously Apple is in its own fashion a monopoly. NVIDIA is in that same category. Microsoft's already backed them, right? Does the pattern just shift for if you're mega enough, capital comes from the big tech providers all of a sudden as venture investment or a substitute for venture investment in some way? If we were looking at OpenAI in 5 years, what would that hypothetically look like, and where is their money coming from if they're not yet profitable? Because I find it surprising to believe that OpenAI might actually die because of cash one day.
Yeah, I wouldn't be surprised at all if OpenAI is dead in 5 years.
Really?
Yeah. Their burn rate is high. It's very high. Yeah. NVIDIA has an incentive. So NVIDIA is not a disinterested investor in OpenAI. They want OpenAI to buy their chips. And so in a way, they're kind of feeding their own growth machine by contributing capital to OpenAI. If they are, and I don't know the details of whether NVIDIA is investing in OpenAI or not, but there's a secondary agenda there for them to provide risk capital to their one of their biggest customers. But broadly, I think the question of how much risk capital will there be in the system, right? Damon correctly highlighted, that is one of the most important variables. And partly that is informed by politics. And so there was a significant amount of political conversation at All In Summit. And so the question becomes, we have a high amount of debt presently. This is something that David Friedberg talks often about. We have a high amount of debt. We pay a high interest rate on that debt. So we're paying a significant amount of interest on our debt. We're continuing to steadily increase the amount of debt we have. And both political parties are responsible and at fault for this. In both political party, Democrat and Republican administrations, we've continued to increase the debt. So now where we stand is we have a problem to resolve. We've been too loose with our monetary policy. We've given out free checks and we've overextended financially in a way. We can grow our way out of that problem. We can try to tax our way out of that problem, but that results in lower growth and thus even lower risk capital. Or we can continue to drive up debt and punt the ball, push that problem down the road. And this political choice coming up will play a role. Any kind of tariff increases consumer costs. Any kind of tax reduces the labor market and reduces risk capital, right? These are the natural side effects of higher taxes. And so all of this is to say there aren't any great, easy options right now, given the current debt structure. And it sort of suggests what Peter Thiel was saying is like there's going to be some significant headwind events coming up, and there's a possibility that the market significantly contracts overall. The global stock market, the global venture market, every market significantly contracts for a few years, resets, and then reemerges. That is more than trivial possibility of happening.
Yeah, I think elaborating on that slightly, the doomer case for OpenAI looks something like they've already grown to roughly 180 billion in the private markets, and they have to continue to raise tens of or hundreds of billion, per year, and that money simply doesn't exist. And conversely to them, the other two that I'm aware of, private companies that currently hold valuations near or above that include Stripe and SpaceX. And if you look at those two companies, they have a seemingly monopoly. So back to Shashi's outline of Peter Thiel's kind of monopolistic approach, it feels to me like OpenAI is on the shakiest of ground there. And so again, if you want to make the doomer case, I do think it's just simply they burn too much cash. They burn cash too quickly. The amount of sums they would need to sustain are simply too large, and competitors like Google, who can fund this via internal revenue, can outcompete them because they can survive longer. Anthropic, might face a similar situation to OpenAI. Again, I think the thing that complicates this is, as Shashi was outlining, the kind of incestuous partnerships that exist here. So what I think OpenAI and Anthropic have done, either out of strategic acumen or necessity, is partner with people with large sums of money and self-sustaining revenue invested in their success, a la NVIDIA, Microsoft, and Amazon, so that they can kind of go back to these backers and say, look, guys, we need this much money. We know it's a winter. We have to survive until we bridge to more capital being available. So I don't think it's likely that we see any of these companies going to zero, but I do think that it's a non-zero chance. And I do think that if that perfect storm as outlined kind of happens, there certainly is a failure mode that's available to them.
I'd say there's a fairly reasonable, maybe even better than 50% chance that 5 years from now, the large language models that have the biggest market share are Llama, subsidized by Meta, Gemini, subsidized by Google, and OpenAI as a wholly owned component of Microsoft. I think that would be kind of the particularly likely angles. Mm-hmm. If Anthropic were to sell to one of the big boys who could subsidize them with existing revenue, as Damon was saying, I could see that surviving as well. But it seems like the LLM's future survival, at least as it stands presently in terms of the revenue model and cost structure, needs to be subsidized by some other major tech revenue.
Out of curiosity, as a follow-on question to that, Shashi, I'm just kind of curious of your thoughts here. We've seen others like Perplexity, who is not necessarily a model provider, right, but is kind of playing in a different game. How do you see them fitting into the puzzle? And there's a couple of reasons I ask. Number one, they're kind of taking on Google without this secure kind of revenue backing. And then number two, they're also burning a lot of cash in form of R&D and advertising. Like as an example, Jim Harbaugh, who is the new head coach of the Los Angeles Chargers football team, was spotlighted in NFL opening kickoff day, effectively opening weekend, in a Perplexity ad. And so, those things aren't cheap. And I'm just curious how you see kind of Perplexity being tangential to these, but also involved in the same ecosystem.
The two things that matter in a startup are your product and your go-to-market. Perplexity has really crushed the go-to-market. Their product isn't differentiated, and technically there's not really a moat there, but what they have created is a fabulous path to market, and they've got users. And so my best guess for Perplexity is that when the heat turns up, they will have acquirers ready to purchase their go-to-market, not for their tech, just for their path to consumers and being able to sell things.
Yeah, thanks, well said. Turning the focus slightly, but kind of on a similar path, Ilya, so former OpenAI massive, kind of co-founder and was head of that company for a long time, has recently spun out and has raised an estimated $1 billion on a $5 billion valuation, effectively at the seed stage from Andreessen Horowitz and others. I'm wondering, given everything we just said, that to me feels like an obvious anomaly for reasons that, probably most germane to Ilya himself and the other kind of co-founders that he brought with him. But starting a research lab with that kind of funding feels like a difficult endeavor. So, Lakshay, maybe we'll start with you. Any thoughts on SSI, Ilya, the raise, et cetera?
Yeah, I mean, I think the thing that's interesting to me is that, it sounds like he's going to be making models, probably. It's not clear to me whether we talked about this before about this idea of potentially he's providing safety or security solutions that then feed to the models, or whatever. But $1 billion is an insane amount to be doing something that's accessory to a model, basically. And so I guess the place I kind of land is that given how we've seen LLMs land generally, where they're useful in places, but still not again, they're not world exploding as we kind of we're kind of hyping them up to be many years ago. It feels kind of late in the game almost to be trying to introduce a new set of models. And we've kind of seen that with OpenAI, Anthropic. All of them are kind of beginning to convert into product companies and not research ones. So the kind of question I have with this $1 billion is obviously a lot of that's going to go into research. But will he arrive at the same conclusion to make a product company because that's what keeps it alive and growing, Because I think the research conclusions have been pretty well established that unless someone tries something really, really novel, it's not going to be the Oracle machine that everyone's expecting it to be.
I think playing that out and just taking the counter side for the sake of discussion, I think the way that you would design that path is if there are fundamental plateauing of capability due to data and compute. Meaning if you do need some new architecture that is not transformer based or neural network based or similar, if what they're trying to do is discover something that is fundamentally as powerful as a large language model, but perhaps less black box, kind of safer, in a nod to their thing, that feels to me if there were an area of opportunity for a new model, that's perhaps it. But generally, I agree with you. It's difficult, given the evidence that we have currently, to see where there might be space for a new model and how that company doesn't eventually undergo kind of the same transformation as OpenAI. Start as a research lab, end up as a product company.
Yeah, the Charter for Safe Superintelligence Incorporated is to take a couple of years to do research. At least that's what they've said they would do. $1 billion can last a while, so they can outlast the winter if they just are smart with their spend. They're going to be based partly in Palo Alto and partly in Tel Aviv. So presumably they will have a strong security component to their company, and so what's to be expected? They're going to be hiring top talent and buying GPU or buying processing power. My best guess is that they're going to take an angle of this that they feel is unserved and really try to nail that. It does feel, as Peter Thiel said, or as we highlighted, Peter said earlier in the call, this is a still nebulous space. To be determined who the ultimate winner is, and it may feel like it's far along, but it feels like an unresolved question who the ultimate winner of this industry will be, if there is one. So I don't feel like it's too late I still feel like there's room for someone to do a better job. And the question is, what approach will he take and will they take that is different from OpenAI or Anthropic or Claude or Llama?
Yeah, I think on that similar line of topic, what do we think about speculation that, number one, OpenAI has a new, quote unquote, strawberry model coming out, and then number two, they've also floated price points as high as $2,000 per month. What I guess maybe let me break this into chunks. What do you think, assuming that those reports are accurate, a new model, strawberry or otherwise, would need to be capable of in order to demand $2,000 per month? Does it need to have operations as a full-time employee? Does it need to be close? I'm curious as to where you both land. Maybe Shashi, we'll start with you on this one. What do you think?
Is this like a Raspberry Pi kind of thing? Like
no. So
how many fruits are we going to use here? We've already got the apple and the raspberry.
No, my understanding is it's kind of a follow-on joke, effectively, and that one of the things that ChatGPT and the GPT-4 Omni model powering it currently got wrong, we're trying to count the number of R's in the word strawberry. Like repeatedly for multiple times, people were asking it how many R's were in that word, and it couldn't get it right. And so that has been inspiration for naming the new model strawberry. Well, actually, feel free to like either thumbs up or down that one, but that's what I've kind of seen circulating online.
I have not been on Twitter in a long minute, so the tech sphere of commenting on every single thing that OpenAI is doing, I've been long detached from. Like I've seen like some like YouTube thumbnails talking about like, oh, the big strawberry model, but the channels who post that sort of stuff are all like, they're very kind of clickbaity and just rumor mills, it feels like generally. I guess I'll keep speaking, but you prompted Shashi to reply first. But the like I guess like from what I've seen, like the expectation is that like this strawberry model is by default doing like chain of thought reasoning. So it's able to take multiple steps and execute on them in sequence, whatever. That does not sound compelling enough to me to justify $2,000. But I think both of those numbers are some level of rumor mill and probably talking about different things realistically. I do think that the $2,000 thing will probably have a market realistically, like super fast server availability, like guaranteed like sub like 100 millisecond latency, all that sort of stuff. I can foresee that there are companies who will probably pay for that sort of thing. So there is definitely like a space for an expensive LM provider, probably. The question is just like what features does that come with? And I'm going to OpenAI Dev Day on October 1st, which is like their kind of mini tech conference. And I will be pleasantly awaiting to hear like what collection of startups they're trying to crush next. I would not be surprised if it's in the agentic category just because that's had so much hype. But we will see. We will see.
I don't have a lot to say on this. I'm not surprised they're trying other products to make more money. I'll say it that way. Clearly they're spending way more money than they're generating, and they need to find a way out of that. For a parent company that is still a nonprofit. And Elon still has, by the way, a lot to say about that, and he is still incredibly perturbed that somehow this nonprofit that he donated money to has turned into a for-profit. And I have to agree. In principle, I think there's like something really unsavory about this path, the sort of like hybrid path of like nonprofit governing a for-profit, and how does that really play out if it's raised a ton of money and has investors and expectations and a secondary market. There's something that feels not quite right about that.
Out of curiosity, I mean, I don't know if this came up because it's two different conversations. I don't know if there was a panel, but like with all the conversation about like models, providers, who's going to survive, who do you actually bet on? Was there any conversation about like what Twitter/X is doing with Grok? Like what is the idea there? We've only been talking about Anthropic, OpenAI, Microsoft, and big tech, but Twitter is obviously kind of in that space too.
Yeah, I forget the name, but they invested in a massive supercluster of compute, and I think they have a really interesting angle with Twitter data. And I have to agree, I think that's sort of like a real like an interesting angle to have like live data as the kind of core differentiator of your LLM approach. So how that plays out to be determined, but I think there are going to be real use cases, and Twitter's not going to die, right? Like Elon will support this thing to the very end. He believes in free speech, and he thinks And he may be right that the Twitter is the forum of free speech in a way that nothing else is today. Everything is so regulated and censored and has agenda. We know the mainstream media is entirely, kind of oriented around their agenda, whatever that is, and everybody's got different viewpoints. But I think he may be right that Twitter X is like one of the last bastions of like genuinely free speech left, and so he believes in it. He's not going to let it die. He's clearly invested in a supercluster of compute. He believes that they have an angle there for AI features that Twitter can provide that nobody else can.
Got a few disparate comments just on the back of the things that you all have said. I'll start with the grok of it all, just given the recency there. I think the interesting and very compelling thing about Twitter X and the grok model is not necessarily it in isolation, but it's it at the nexus of SpaceX and Tesla. Right. So like just the autonomous vehicles, the Optimus robots, et cetera. Also all of the satellite deployability of SpaceX, that kind of three-way, intersection or nexus there creates a really compelling angle that if somebody were going to do AI significantly different than other people, there's at least something there to pull from, right? There's all the data that Tesla can gather. There's the connectivity that SpaceX might be able to offer. And Elon is obviously the only one with that kind of leverage capability across three different independent, although kind of, related entities, if you will. So I think that's really compelling, independent of whatever the grok model becomes, just having both access to real-time data via X Twitter, and then also the kind of autonomous data that comes out of Tesla that effectively no one else has at scale. Returning to the strawberry kind of $2,000 per month conversation, the thing that it's making me very curious of is, to date, there really hasn't been any vector to compete on in terms of models outside of performance. Meaning, because the most powerful models, a la OpenAI via ChatGPT and Anthropic via Claude, have given their most powerful models for effectively $20 per month, it becomes very difficult to build a more powerful model at that price point. Now what we're seeing is pricing pressure because it takes more and more capital to train these models and deploy them and run inference, et cetera. As those dollar amounts on a per month basis creep up, let's just use $2,000 as the anchor, that opens up the opportunity for startups, competitors, et cetera, to give just as good of performance, cheaper or faster. And so both of those new kind of vectors open up that I think could be quite interesting if we do see OpenAI continue to push prices up, to the hundreds or even thousands of dollars per month. Great. Let's one more thing. I think, Shashi, you teed this up not too long ago, but as a tangent from where the conversation has been, you talked about the release of Tesla's Cybertruck, kind of in coordination with the Elon conversation we were just having. And I know that there's been some broad public discussion around, is Tesla a car company? Are they a robotic company? Are they a autonomous driving company, et cetera? But I'm curious where you're falling on Cybertruck success, failure, Tesla as a whole. Take that in any direction you'd like.
Yeah. The thing that you have to know if you're an investor in Tesla and SpaceX, if you're an investor in Twitter and Elon's purchase in Twitter, what you have to know is ultimately you live in Elon's world. The guy is a freaking mad genius, and he's going to do it his own way. Whatever that looks like, he's not going to be compelled by anyone else's opinion. There's something to really honor about that, that he lives life on his own terms and does it his way, good or bad. He loves the Cybertruck. He loves the project. He loves what it looks like. He loves what it represents in the world as like this bulletproof kind of rolling tank down the street. And I respect that. As a pure the business of the Cybertruck feels like a negative. They've obviously spent a lot of money developing this thing. They don't charge that much for it compared to some other kind of very fancy sports cars. The design is not my taste. I think it looks kind of like a tin can, but that's okay. It's Elon's passion project, and he loves it, and that's why it's going to exist. It's because Elon loves it. It's his company. He's going to do whatever he freaking wants, right? It's his company. So I guess that's my view of it. Is it's not a moneymaker. If you're betting on Tesla, you're betting on Elon's vision, good or bad, and you have to take both as they come. I don't see the Cybertruck selling a ton more units than it's sold. It has not been moving the volume of units for Tesla very much, and you shouldn't expect it to going forward. There's not a version of it that I think hits that mass market appeal, and that's okay. It is what it is. So I think it's sort of a fancy show car for the most part. It's a niche product. It's not going to move units.
Yeah, go ahead, Lexi.
Yeah, I actually we went to a Tesla showroom a couple of days ago, and I like hopped in one of them. It was kind of interesting. I mean, I guess like I think the biggest thing in my eyes, so like the design is a sticking point for a lot of people. I think that there are, of course, like initial buyers are a lot of folks who are like kind of in Elon's camp and excited and kind of share a lot of the vision that he has, and are just kind of excited about the things he's doing. And that's what's led a lot of the purchasing part. I mean, even here, I've seen like maybe 2 or 3 just kind of rolling around like the neighborhood. So there's kind of like an audience that's buying it. I think the problem with the whole mass market appeal is that, like, for example, if I were sitting there, like, as someone who generally likes techie, futuristic looking stuff, design's okay. I'd probably put a wrap on it to change the colors or something. But like ultimately, the reason I would be paying for that car is because I like the vision of it. But like if I'm looking for a practical reason, there is a lot of other things that are probably better to buy and get that value out of, right? If I'm looking for a pickup, like I don't need a, what is it, like $90,000 or $80-something thousand vehicle to cover that need, right? If I'm looking for something electric, like Ford has alternatives, like all these other companies are emerging with alternatives. And I think for me, like looking at Tesla vehicles, I like Tesla, for the record. Like having like full self-driving is fantastic. But in my head, like the cost of what a Cybertruck is not aligned with like what is the utility I, as just like a layperson who like at most is buying like milk cartons from Costco. And that's probably like the heaviest thing in my like car's payload at a given time. You know, I don't need a Cybertruck that's like 18 feet long to do that. And in general, it's going to be hard to get mass traction because for the most part, I think when you do the arithmetic of like I'm paying $90,000 for that thing, it leads to a lot of thinking about what am I actually doing with this $90,000 that justifies this cost.
I think the one interesting thing about the Cybertruck, just in general, is that it sparked conversations like this. And I've never been around anyone that doesn't have some sort of opinion on the Cybertruck. And I think a lot of that comes from both Elon's, kind of pushing of these kind of, narratives, and also just in the stark design. Like I think the design is purposely, polarizing, if you will, just to kind of drive engagement. I also think that some of the ROI decision making that can be drawn on Tesla as a whole, not speaking just specifically about the Cybertruck, but in, Model 3s and elsewhere, is there is some intrinsic return on that loss, even if it isn't made up in the capital of the expense of the car purchase. And what I mean by that is it behooves Tesla to have as many cars on the road as possible, because every car is a data acquisition engine, in addition to fulfilling the consumer need of needing to drive or haul things, like Lakshay pointed out. So in many ways, I do wonder how many of these cars, Cybertruck or otherwise, Tesla uses as a simple loss leader to say the more cars we have on the road, the more data we can collect, the closer we get to Optimus and fully autonomous driving. And then we will eventually become profitable when we can sell, a very simple 4-wheel design, some box people sit in that can drive them from point A to point B autonomously. And then we don't have to worry about Cybertrucks or, roadsters or any of this.
One of the big things Elon talked about in his All-In Summit talk was the Optimus, their view for that, and that they envision there to be more Optimus robots available than humans. And the price point he referred to as the price of a small car, so $10,000 to $25,000 per robot. And the idea is that it would be trained to do everything that people do, and doesn't have to sleep, obviously, needs to charge, but doesn't need to sleep. And so his vision is that the Optimus and the robotaxi business are many, many trillions of dollars in revenue, let alone market cap. And that's their real vision for like, how does the money work for this thing, for Tesla? the money comes from Optimus and Robotaxi. And if you're betting on it financially, that's what you're betting on. They figure out Robotaxi and they figure out Optimus. And if they do, you're going to make 100 extra money even on today's price. If they don't, then you're betting on them being a car maker, and they're overpriced as a pure car maker compared to the other car makers.
Yep, I think that's well said. And it's a great place to stop because we are at time, and we will see everybody next week. So thank you, as always, for joining us for the Scholar AI Founders Pod. Remember to catch us on all the typical podcast locations and find us on our YouTube channel. Thanks, and see you all next time.
Out a little.